Hello guys and welcome back to our YouTube channel.
In this video, we're going to be talking about a couple pairs going into next week. Ryan's going to be doing AUDCAD and I'm going to be doing GBPUSD.
But before we get into that, make sure you like, comment and subscribe and turn on post notifications so don't miss any content.
So let's get straight into it. Right guys, so I'm going to be talking about GBPUSD going into next week, doing some top-down analysis starting from the weekly time frame. So what can we see? In terms of market direction, it's very sideways moving and it's very rangy. So there's no real clear trend on this market on the higher time frame perspective. But on the lower time frame, we'll be able to see that current price action is very bullish. But what we're looking at right now on this weekly time frame is bouncing between psychological levels. So I've got a psychological support down here at 1.2, where it was using it, and then we saw a big false breakout below it, and then we broke back above. So that's why I've got this this level in here. So we also have a resistance level up here that I've got two. I've got one at 1.42, and I've also got one at 1.43. And when we jump down to the lower time frames, we'll be able to see why I've got these two, because we've rejected one of them. However, there is still a possibility that we might need to come up higher to reject 1.43 as well before we actually see some downside movement. Because as we drop down to lower time frames, we'll be able to see that we do have a neutral bias for this pair at the moment, and we need to see some extra confirmation for either buys or sells. Price was using this level in the market, 1.34, as like a mid-range level, where it was using it as resistance in the market. As you can see, it's got multiple touches. And then we finally saw this breakout to the upside, and ever since we've just been moving in bullish market structure. So buyers are in control on the higher time frames. Let's drop it down and see what's going on in the lower time frames. Before I do that, actually, you can see on just by the weekly candlesticks, where we did reject 1.42, we did form this massive bearish pin bar, which does emphasize the fact that we might see some bearish momentum going forward. So we've seen this bearish bearish pin bar, followed by another bearish engulfing, and even looking at the next few weekly candles, we have left wicks to the upside. So it is showing potential downside movement, but we need to be careful, of course, because the market is heavily uptrending. Let's jump down to the daily and see what else we can see. So this level through the market here, 1.34, you can see that when we did actually break out of it, if I highlight all of this market structure, you can see that we didn't break out impulsively. We broke out very correctively, very there's no clear direction, so there isn't buyers stepping into the market very impulsively. They're just gradually breaking through this level. So that's one thing to keep into consideration. And then ever since around here, about the 8th of February, we actually saw a big impulsive movement reaching 1.42. So that is where I would say that buyers clearly stepped into the market with a lot of strength, driving price up to this key psychological resistance level. And as you can see, off of this level 1.42, we did form this evening star formation. Ever since, we have just been making this bearish market structure. Now, this is where it comes into play that we do have a neutral bias for this pair, because at the moment, there is no market structure on the daily time frame which tells us that we're bullish or bearish, because we are bouncing between a support and resistance down here that's around 1.38, and we do have a resistance level here at 1.40, which will jump down to lower time frames to see how significantly this level is being used. So just from this at the moment, what we're looking for from a daily time frame perspective is we're either waiting for a break below this level to be looking for sell positions, or a break above here where we'll be looking to trade it back up to the upside. So either or is what we're looking for. Drop it down to the 4-hour now. This is where we can start to see some chart patterns that come into play and seeing where buyers and sellers are stepping into the market. Now, a couple of weeks back, what we were actually looking for was an inverse head and shoulders pattern. So as you can see, we did have this being the left shoulder, this being the head, and this being the right shoulder. And now this is where the rule of the head and shoulders pattern comes into play, that you should always wait for a break of the neckline. Sometimes you can trade at the shoulders if it's on the higher time frames, and you can trade it down to the neckline. However, in this instance, we can see that the neckline is at a psychological level of 1.40. So buying at the right shoulder here would not have been a good idea for us, because we can say that sellers at this level here at 1.4, driving price down, are way too strong and have too much momentum in the market for buyers to just step in at this level in the market to drive price higher. And as you can see, what price actually done, well, you can see where people were buying the market by these wick projections, and then all price did was form this big false breakout to the downside, potentially just stopping everyone out, and then we saw the movement to the upside. But it's still not enough for us to be buying into the market. As you can see, we've had multiple touches. I'd say 1, 2, 3, 4, 5 rejections of this 1.4 level. So we can say that before we start looking for buyer positions, we clearly need to see this level violated. So what we're going to be waiting for next week is a break above this level, followed by a pullback to retest it as support, to then trade it back up to the 1.42 region. That's what we're going to be looking for our buying scenarios. What we're going to be looking for selling scenarios is a break below this support here. Now, this is where we need to be careful, because obviously the buying positions are a lot more clear because we're going with the trend, the higher time frame trend. We're breaking above a psychological level, so it's going with the trend. It's a lot more easier. However, the selling positions, I believe, will make it a lot more harder, because what a lot of people are going to be doing is, once they see this break below here, they're going to be selling the market. And what we need to be careful of is a false breakout, because if I jump back up to the daily time frame, anything below this level could just be a false breakout. As you can see, where buyers stepped into the market to drive price higher was this big bullish candle here. So this big bullish candle is where buyers stepped into the market. So we need to be careful that the same thing doesn't happen again, where we just break to the downside and then we see buyers step in. We want to see a nice clean breakout to the downside, potentially a daily engulfing candle or even a weekly engulfing candle, to give us that clear sign that it is a breakout and not a false breakout. So that's what we're going to be waiting for. We're not going to be trading a breakout. We're going to be waiting for clear market structure to tell us that we are moving now to the downside. And then what we'll do is we'll look to trade it into some of these lower levels down here, potentially like here, or even a little bit higher, not to be greedy, something like that. But yeah, so going into next week, we have a neutral bias. We need to sit on our hands and wait for the market to provide us with some evidence of what to do next. So either a break above 1.4 to be looking for buy positions, or a break below 1.38, a strong break below 1.38 to be looking for sell positions. But yeah, this is GBPUSD broken down going into next week.
Right, guys, I'm going to be breaking down AUDCAD going into next week. So yeah, let's get into it. On a weekly chart, yes, start there. We can see that we got a bearish downtrend, which has now been broken. As you can see, multiple touches along here in the past, and all of a sudden we tap down here at that 0.82 psychological level, and then boom, we get that massive pulse move to the upside. So as you can see, our bearish trend has been violated, and now we're in a bullish market structure on the weekly chart. Therefore, we should be favoriting the buys going into the smaller time frames, etc., etc. Draw your attention across here. We can see price also rejected this psychological level 0.93. And this is just proven once again that we're just in bullish market structure, as we're using support as a driving force to push the market higher. You can see here where price made this high. We can see across here, psychological level 0.962. You can see we also tried to reject it here with this bearish engulfing candle, failed to do so, price pushed up. And that's when the buyer stepped in. As you can see, big bullish candles pushing to the upside. So yeah, with that being said, you can see we then made a high in the market, and all price has to do when it makes high highs, it needs to pull back, it needs to retrace and come back to certain levels. And as you can see, we made this doji here on the weekly chart, beautiful doji, as you can see there, tapping into the 0.62 psychological level. So now we might potentially see a morning star form on this weekly chart from here. See that push to the upside, which we know can happen because we're in such bullish market structure. So if we jump on the daily, what can we see? You can see daily, what can we see? We can see how we've been pulling back to this level. You can see we're making impulses, small corrections, impulse, small corrections, impulse. And now all of a sudden, it doesn't look like there's going to be a further more impulsive move to the downside since rejecting this key level in the market. And when I jump down on 4 hour, this will come a lot more clearer as to why. Right, so now we're on the 4 hour chart. We can now see why the bulls are going to step in at this level, and just adding some confluences together for that. So ever since this triple top here, when the price moved from bullish to bearish, we formed this Elliott wave theory. We've had a one impulse correction, third impulse, which is which is the biggest impulsive move, our fourth correction, and then our last and final fifth wave. And now in the Elliott wave theory, when this impulsive move is finished, this bearish trend is finished, we could then expect price to flip and go bullish from here. So as you can see, that's now been compromised. There is a fake trend line, but I don't really want to draw it because it's not perfect. And as you know, trend lines aren't perfect, but I'll show you just for example. If I draw this across here, you can see this trend line across here. It rejected it here at the second wave, and then second to third, boom. And then when it came to third to fourth, we had this false breakout. But all it's doing is you can see these wick rejections here. It tried to reject it, but the orders were at this support level in the market across here, and then all of a sudden we flipped, and then we came back inside and traded inside this trend line again. But once again, it doesn't really look nice on the chart. We don't need it. Now, from this level, what have we seen? We've seen the bulls step into the market. We see this big impulsive move from the psychological level 0.962, and that's what gave us that doji where we came down and then boom, pushed back up, and now we're at the equal playing grounds. As you can see, this level across here, this is where we close. It's a nice area of significance running through this level. So once we've got that impulsive move from here, what do we see? We're now forming this type of correction, and it looks like some sort of triangle pattern where we're squeezing in between this level. Lots of wick rejections underneath this level, lots of it. And you can just see across here as well where the bull stepped in, a big push of buyers stepping into the market. So what it looks like we're doing might be tapping back into where those buyers stepped in to then look for that push back up once again. Yeah, so that's that. And also looking at this as well, Fibonacci from swing low to swing high, what can we see? We can start to see that we are currently rejecting the 50% fib retracement, which lines up nicely with this area of significance running across here. So once again, just adding more confidence to this. And also where our target is as well, it's also very nice to see where our targets are. Our target would 100% be across here, across the psychological level 0.98. Let me draw that in. Boom. 0.98. It's there on top of that 0.98, and you can see it ties in perfectly with the 1.67 Fibonacci extension. So when we be looking to enter this market, we can look to be entering here and targeting the 1.67 extension, which would be very, very nice, as you can see. So there's lots of confidence adding to this trade going into next week. We've got rejection of psychological levels, breaking of bearish trends, Elliott wave theory complete, break above these significant levels across here and coming back retesting it. There's wick rejections, there's Fibonacci extensions and retracements. There's so many confluences added together, and then how to enter it is something how we would break down in our premium group. We'll talk about all that, how to enter it, where to take profits, where to do this and where to do that. So if you want to get involved with that, all the links will be in the descriptions below. So yeah, going into next week, this is what we're looking at for AUDCAD. Looking for that buy, looking for buyers to step in. As soon as buyers step in, we'll be joining them, looking for the further continuation to the upside. So yeah, once again, this is AUDCAD going into next week.
Thanks for watching this video, guys. We really hope you took some value away from it.
If you want to be a part of the team, all the relative links are in the description below. So click on one of them and it'll take you exactly where you want to be.
So have a good week, everyone, and see you next time.